Look, if you're sitting there hoping Tactical Asset Allocation, TAA, is some magic wand that'll tell you exactly when the economy's about to flip, you're either painfully naive or you've been burned way too many times. The harsh truth? Nobody really nails timing perfectly. But ignore that. And you're throwing money at noise, guessing instead of acting like a pro. The frustration you feel? It's real. Watching markets swing, wondering if your portfolio is a step behind, that gnawing doubt is a silent killer. It's the difference between growth and loss, between leading the game and being a chump reacting to yesterday's headlines. Here's the deal. Tactical asset allocation isn't about crystal balls. It's about reading the subtle shifts most miss, the ones hiding underneath all the chaos. Forget the obvious signals everybody talks about. Interest rates, employment numbers, GDP. Those are lagging indicators everyone scrambles over. You want edge? Look at liquidity flows, shifts in credit spreads, and volatility trends before the crowd catches on. Watch how real capital moves, not just indices. Hedge funds live and breathe this. They're not gambling. They're preparing for what could happen by layering clues strategically. You have to stop waiting for perfect signals. They don't exist. Instead, build a framework where a slice of your portfolio flexes quickly to these market whispers. This means having liquid assets ready to deploy and retrench the moment those credit spreads start dancing weird or volatility flips without clear news. You need a system that listens first and reacts fast, not one that guesses or holds dogmatically. That agility isn't just about protecting your capital. It's how you crush it when the world turns upside down. Also, don't let TAA be some loose cannon. It's not a free-for-all chasing every bounce. You need unshakable discipline. A guardrail that says, I pivot only when my data screams. Set your triggers based on hard signals you've backtested, stuff that's not widely known or cheap. Inside that framework, yes, your allocation shifts hard and fast, but only because you know exactly what tells you to move, not because some idiot on TV shouted a headline. And here's another brutal but true point. Most investors either don't switch fast enough or overtrade, chasing noise. Neither matters if you don't link your TAA moves to real economic structural changes. The shift in manufacturing orders, the health of supply chains, consumer credit growth, all these are like the nervous system underneath the economy. A sharp TAA layer that senses changes. There can reposition you before the obvious market collapse or boom kicks in. That's how hedge funds protect billions and make gains when everyone else panics. You want proof? Look where cash goes when the market starts smelling trouble. If you don't monitor that daily, you'll be dead money while others capitalize on it. So build or buy the right tools. Get real-time info on flows, credit spreads, and volatility. Not the stuff on Bloomberg that updates 3 hours late. Hedge funds operate on the edge of information. You want in? Stop being lazy. Start demanding data newer and sharper than what normal funds get. Your edge depends on it. Above all, drop the idea that tactical asset allocation will predict the economy perfectly. It doesn't. It prepares you faster than others, lets you reposition before the mess hits, turns uncertainty into opportunity. This means being ready to bend your portfolio based on smart, uncommon signals and knowing exactly when to hit the brakes or accelerate. If execution is slow, all the analysis in the world won't save you. It'll just drain your capital while others adapt. So here's the order. Stop chasing headlines. Get your hands on superior flow data. Build rigid guardrails for shifting allocation. And train your team to act ruthlessly on those triggers. Sweep away the comfort of passivity and guesswork. You want your portfolio to beat the economy's moods, not just survive them. The world isn't waiting. The market won't hold your hand. You've got to be fast, focused, and unforgiving in how you use tactical asset allocation to be ahead or be gone. That's the raw truth nobody else will tell you. Subscribe to our YouTube channel and open the featured link to learn more.